What's up, guys? I'm always trying to come out with how to take very, very simple trades. So I just took a trade. Currently, this is the trade running. So currently, I'm running into profits. I'll be tracing it and all that. But with this trade, I didn't take it as usual as I do. I'm just going to show you a trick I've noticed on the markets, and you can probably also use that trick to take trades. So clearly this is the market. You are seeing the market in the 1 hour time frame, right? So usually my strategy is I wait for a level to break. After the level gets broken, the level, especially if the market is in a downtrend, the level will retrace into a supply region, and then once it retraces into a supply region, it will come back and then break the level again. So basically that's how I take my trades. Now this time around, I took the trade in a simple way that I think a lot of people can try to use, right? So instead of maybe the 1 hour time frame, just go on the 5 minutes time frame, right? Now if you go on the 5 minute time frame, what do? You just trace the market structure. You just look at the market structure and then take your trade. So let me just show you. So you can basically just be taking trades if you are someone who knows market structure. So market structure is basically the fundamentals, right? Basically knowing how the market is moving. Once you're able to trace the market structure, you can take profitable trades. So look at this particular chart, the 5 minutes time frame. So right here you are seeing that the market started printing higher highs and higher lows, higher highs and higher lows, right? Higher highs, higher lows. So all you have to do is to be tracing, since the market is in an uptrend, sorry, you'll be tracing the lows, okay? You'll be tracing the lows. So this was a low that was printed, okay? You'll be tracing the lows, and then you'll be looking forward to the market breaking this low. So immediately you see that the market breaks this low, it simply tells you that the market is going on a downtrend. So if the market was in an uptrend and it breaks this low and it's going on a downtrend, what you do is you short the market. So clearly right here, you'd see when the market when it printed this high and then it came this low, you just have to trace this low, right? And expect that markets will break that low. Now what happened? Market didn't break that low. It printed another high and then came back and printed this low. So you are good to go. Market printed this high, came back and printed this low. You trace that low, and then market went here, okay? It didn't really print a high like that. I mean, it printed a high, just that it didn't really break this high with much momentum. Came back, and what happened? Broke this low. So immediately the market broke this low on the 5 minutes time frame. You knew that the market was coming down. So at this point, when the market breaks this low, or the market prints beneath this low, all you have to do is you take a short trade, okay, and then set your stop loss over here. And you can go for a simple risk to reward 1:2 if you don't want to be greedy. Okay, you can go for a simple 1:2 risk to reward, and then guess what? You just win, right? So sometimes if you are someone who doesn't want to use any strategy, and then all you know is market structure, you can also use market structure to take trades, and then you win the trades once you study that. So if you trade especially crypto and you go on the 5 minutes time frame, you realize that anytime market is about to fall, it forms head and shoulders. Anytime market is about to rise, it also forms inverse head and shoulders. Let me say 70% of the time. So all you have to know, right, even if you don't know head and shoulders, just know the market structure. Because right here, okay, this is a formation of head and shoulders. Right here, this is a shoulder, this is a head, this is a shoulder, and then guess what? Market fell. Now, Once you are done taking this trade, okay, as you took the trade and it was coming down, what do you do next? You wait. Now the market is in a downtrend. Now you've taken your trade, you've won. Now all you have to do is you trace the market as the market is in a downtrend and wait for the trend to reverse. Okay, so how do you trace the market in a downtrend? You plot out the highs, the lower highs. So this is a lower high, and then you wait for a lower high to get broken. So market printed lower low, went up to print another lower high, printed the lower low, went up to print another lower high, printed the lower low, went up to print another lower high, right? That is this. Okay. Now market printed another lower low, went up. Okay, so you are waiting for another lower low. It didn't break the lower low and then came back and closed above the lower high. So at this point, you know that market has closed above this lower high. So what do? You just take a long because the downtrend is now broken. So immediately the market prints above this level. You take a trade, you set your stop loss here, and then you go for a simple 2-to-1 risk to reward. You go for a simple 2-to-1 risk to reward, right? A simple 2-to-1 risk to reward, and then you realize that yes, you made your profit. So that's like 2 trades just off market structure. You don't care where the market is going. All you are doing is waiting for the market structure, waiting for the market to print. Okay, so very simple, right? So you realize that as the market was about to go high, the same thing happened, formed an inverse head and shoulder. So this is a head and shoulder pattern, shoulder, head, shoulder, and this is an inverse head and shoulder. So just like this pattern, but then you inverse it. So if you study the market for, especially with Bitcoin, if you study Bitcoin for a while, you realize that on the smaller time frame, whenever the market wants to go up, it forms inverse head and shoulder. On the same smaller time frames, right? Whenever the market wants to go down, it will form head and shoulder. So imagine you took this trade, you took the long, and then you won. Now what do? Same thing. You wait for the market to break. Now the market is in an uptrend. So you wait for the market to do or to break a lower low. So lower high, lower low. You plot it out. You plot the lows out. So in an uptrend, you are plotting your lows out, right? Sorry, I said lower high. Higher high, higher low. You plot it out. Higher high, higher low. You plot this area also out. Expect the market to just be expecting the market to break it. Higher high, higher low. You plot this area out just by expecting the market to break it. Higher high, higher low. Plot this area out. Just be expecting the market to break it. Higher high, higher low. Plot this area out in expectant that the market was going to break it. Higher high, higher low. So this is a higher low. You plot this area out with in expectation that the market will break it. And guess what? The market went up, printed this higher high, didn't print any other high, and then this higher low got broken. So immediately the market prints beneath this level. You don't have to waste time. You take your shots right here. You set your stop loss here above this level. You go for a simple 2-to-1 risk to reward, right? If you don't want to go for the simple 2-to-1 risk to reward, you can just do 1-to-1. It's no problem. If you did 1-to-1 here, the trade would have been won. But I mean, you can go for a 2-to-1. Sorry, 1-to-2, right? So this is the trade that is currently running. So this is my trade. This is the trade I'm currently running, and you can see that what I'm doing is now I am tracing the lows, right? This is a downtrend, so I'm tracing the lows. So I'll be looking at the higher highs. If the high gets broken, immediately the high gets broken, then I know that the downtrend is over, right? So maybe I'll just get out of the trade or whatever. You understand? Because today I have time and I'm just sitting behind my computer, and I'll just be tracing the market, right? So basically, this is how you can take trades on the 5 minutes time frame. Very, very simple. You don't need to know, or you don't need to learn every single strategy, every single trading strategy. You don't need to learn that. Just learn your simple market structure. Know a proper low, know a proper high. And yes, you need to know a proper low, because there are certain lows that didn't break a high. So if you have a low that didn't break a high, you don't mark that low as a proper low. Let me just explain so you understand. So you see, when the market got to this high and came here, from this low, this high was broken. So this low is a proper low, or what I call a protected low, right? So those are the areas you need to be marking. So with this same thing, when the market got to this high, it came here. Now from this low, this high was broken. So this low is a proper low, or a protected low. When the market got to this high, it came here. From this low, this high was broken. So you understand, when the market got to this high, it came here. From this low, this high was broken here. So you understand. So you just know the market structure, know when a proper low or a protected low has been printed, know when a proper high or protected high has been printed. Just follow the markets, and I think you'll be good. So just check, right? Just study the market with this strategy I'm telling you about. With this strategy I'm now talking about, just study the market and realize that it runs through whenever the market is about to go up, whenever the market wants to go down, whenever the market wants to do whatever, the strategy simply runs through, and you can basically just use that strategy. You can basically just use the strategy to be taking trades, right? It's as simple as that. Just go through, and then you see. Just use this strategy, and then you see, or you understand what I'm talking about, right? So yeah, that's that. But you see, the truth is that this is trading, and with trading, no strategy can give you a complete let's say 100% win rate, right? There's no strategy that can give you a complete 100% win rate. All you have to do is to get a strategy that probably will get you 50% win rate. If you're able to take 10 trades and then you win 5 out of those 10, and then your risk to reward for every trade is 1 to 2. It simply means that whatever amount of money you are trading with, at the end of the day, you are going to make 100% from that amount. So if you are trading with $1,000, or you are always risking $100 on your trades, after 10 trades, you are going to make your $100 back. It's as simple as that. So all you need to be profitable is just winning 5 trades out of 10. And with this particular strategy, you obviously can win. As I just showed you, you obviously can win 5 trades out of 10, right? You can even go as much as winning 7 trades out of 10. Just know your market structure. Market structure is fundamental. Just know your market structure, plot your market structure well, follow the market structure, and you are good to go. So share your thoughts in the comment box. Thank you.